that there. Come on. And that there. Alrighty. Live, and live. Hop la air even. Let's go, love it. Get rid of that. Bring this way over to here. Let's do that. Let's do that. Let's do this. Let's do this. And we are ready to roll. Glasses. Yeah, I got my glasses. Yay. Alrighty. Who do we have here today? Oh, the yard bitch is in the house. Jay Hawker, Kevo, Mr. Nice Guy, the Tater Trader. The Tater Trader. That's funny. JTM, James Hart, how you doing? Jim, Tom, what's going on? Yard bitch. Dave, 92, MC, what's going on? Will be here for you. Okay. Edub, what's going on? Saint Martin, good evening. E-Dub, what's going on? Chief, what's happening? Baratali, what's going on? Nico, how are you today? Ivan, how are you doing? Glenn, Ben, T4, Tommy, Dennis, Steven, David, James, David. Oh, another David. Ever heard of Finello? No, I have not heard of Finello. Gabby, how are you doing today, Gabby? Luna Kate Fun Life. Luna Kata's Funny Life. Okay, cool beans. James Dupree, thank you for that. Jeff, thank you. Okay, so David, what is Finello? Okay, Chief, Uber has not been around for 20 years yet. Salam alaikum, brother. Namaste. Let's start this off. Yay! Alrighty. K-Van, how are you today? The hair doctor is in. Mario Hernandez, que pasa, amigo? Sun Secure, good evening. RNB, good evening. Let's start off. Uber. Dude, I don't know why you want to look at Uber. Uber hasn't been around long enough. UBER. Okay, has not been around long enough. But anyway, here it is. You want to take a look? Let's take a gander. All right, first thing I always look at anytime I look at any stock is the 1-year chart to find out 5 very simple things. Where's the high? Where's the low? Where was it a year ago? Where is it now? And what direction is it going? Okay, she dropped down here at the bottom of the year in December, shoots up, finds the high, pulls back, now she's going back up again. Well, let's zoom into that just a little bit more. K-Van, I want my 1%. Hot Wheels, Mike wants to take a look at Merck. Take a look at that in a second. So look at the last 30 days for Uber. Now, anytime I look at any stock, I always want to look at the last 30 days because the last 30 days gives me a good idea of where do I think it's going next. Well, 30 days ago today, if you didn't know, it is 9:13 p.m., October 27th, 2025. So if you're new here, this is being recorded. So after tonight, you'll be able to see everything on YouTube later on. Just find out from there. What do we have over here? Luna, thank you for that. Alina, are you at school? You can say that. Mr. Bubby V, where do I place my money? Now, Mr. Bubby V, you're new here, so just sit, chill, relax. Everything will make sense at the end. By the time we get to the end, I'll be here till 11:15, somewhere in that area. Breakout invites you to co-host. Now, I like the idea, Mr. Breakout. However, I have no idea who you are. Okay. All right, so Mr. Bubbly, just sit tight. I got 9 different platforms that we're doing tonight. So if I don't get to your question as soon as possible, let me do that. Breakout invites you to co-host. All right. Thank you very much. But I'm going to decline because I don't know who you are. And that's it. All right, so let's go back to Uber. It is the 27th. So I want to go back 30 days, which would be right about here. Okay, that is the last 30 days for Uber, if you really like Uber. All right, we'll check it out. 30 days ago, we're at 98 bucks. We shoot up to 101, drop all the way down to 91. Now we're going back up again. Okay, we've gone from 91 up to 96. That's $5. Well, $5 on a $90 stock is only about 5%. All right, well, let's keep on keeping on and keep moving forward. Home full of holidays. All right, that works for me. All right, that being said, so if you like Uber, check this out. Here's the bottom, 30-day bottom. Now she's shooting out. The 96.42s, well, the 96s are going for 180. Well, that's about, is that 3%? No, that's 2%. Well, let's check it out. Now, if you're not familiar, my name is James. This is Dividend Stock Talk. I want to reiterate those words, Dividend Stock Talk. So basically, we're talking about dividend stock. So if you have a stock you want to recommend, make sure it has dividends, because that's what we're doing here. Now, what I'm looking for is a simple, safe, predictable, consistent 1% per week. Now, if that's not enough for you, if you want a little bit more, then you're definitely in the wrong place. I'm retired, so every single trade that I do has to be safe, predictable, consistent, and no way for me to lose if I can possibly help it. So that's what I'm trying to do. Just a simple 1% a week. Now, it may not sound like a lot, but 1% every single week does come to over 50% per year. Now, I'm not like anybody else. I do not want to sit in front of my computer all day long. So the trading strategy you're going to see tonight is the one that I created for my 9-year-old daughter back in 2008. So I don't know if you remember back in 2008. It was a very interesting scenario. Anyway, besides the point. My 9-year-old comes out to me and says, Daddy, what are you doing? Can you teach me? Now, that was something I was not quite ready for. Can you teach me? So she wanted to learn, my 9-year-old daughter wanted to learn how to trade stocks. Well, how am I supposed to teach a 9-year-old when most adults don't even understand it? Most adults, you go to any adult, most of them don't really understand the stock market, or they're not successfully profitable. Now, I'm not talking, a week or two, a year or so. No, I'm talking consistently. Okay, so if you go back and you take a look at my history, go ahead, research the hell out of me. Have at it, have fun. You will see that I've been online since the 90s. I've been broadcasting or letting out all my trades since 2011. Okay, that was 14 years ago. So I think it was October or August 31st, 2011 was my very first post sharing what I've known. Okay, so great. So I'm just sharing what I know. And what I'm doing is I'm creating a video, what do you call it? Diary, something like that for my children and my grandchildren. So if you think I'm doing this for you, no, sorry. You just so happen to be here to see what's going on. Okay, so I'm creating this for my children and my grandchildren because at some point I'm going to be gone and I want them to be able to know exactly what I do. So if I do this every single night, they can at least live restricted for some audiences. Why did live restricted? What did I say? Okay, notice is unclear. I'm still not sure why I got this restriction. There you go. Notice is unclear. Okay, it's restricted for some. Who wouldn't want to know how to make money? I have no idea. Anyway, let's keep on keeping on. As I was saying, when my 9-year-old wanted to learn, it had to be simple, safe, predictable, consistent, no way for her to lose. So that 5 criteria came up with 5 very simple rules. Rule number 1, Texas. Thank you for that, brother. How many companies does a person need? Mark, I'm not 100% sure I understand that question. You could ask that to, what's his name? Oh, well, see, Biden had a whole bunch of companies. Tony Robbins has about 15. What's his name? Elon Musk. He's got at least 6 or 7 or 8 of them. Okay. How many companies does one? I don't really understand that question. But anyway. Uh-oh, we got noise in the background over here. Noise in the background. Oh, you just muted yourself. All righty. All right, well, that works. Unmute. Oh, I was muted all along. Sorry about that, guys. Didn't mean to. All right, so we got questions in the chat. Who we got? V-Chen. Hey, James, you're on mute. Sorry. Took care of that one. All right, so Uber. I'm going to show you the strategy. Okay, remember I said simple, safe, predictable, consistent, no way to lose. Well, the 5 rules. Number one, never buy something you don't want to hold long term. I'm not 100% sure about Uber, me personally. Number two, never sell for a loss. It defeats the purpose of the game. And yes, it is a game. Rule number three, make sure the company is consistently profitable. Rule number four, weekly options only. And rule number five, make sure all the numbers work. And we're going to go over each and every individual rule so you'll be able to understand them and it will make sense. Okay? Out of everything you get tonight, one question I want eating on your brain by the night's over. Does it make sense? That's it. Does it make sense? I'm not asking you for pie in the sky, believing in fairy tales and unicorns and rainbows. No. Does this strategy make sense? Buy a good company that's consistently profitable. Buy it at whatever price it is as it's bouncing off of a 30-day bottom or somewhere around there, always in an upward trend. I don't want to buy when it's going down. Okay? Am I buying it? Am I selling it? Is the numbers working in my favor? I want everything to be in my favor because why the hell would I want to do this if it wasn't working? Anyway, so that's the number one question. Does it make sense? All right, so Uber, 96.42. The 96 is going for 180. So let's this be the first one of the evening. Yay, Uber! Oh, I can't get that excited about Uber. Sorry. Let's get rid of this. Now, I'm going to do what's called a covered call. Now, if you don't know what a covered call is, basically I'm going to buy the stock, and then I'm going to turn around and sell the stock to someone else for basically the exact same price I just paid for it. Let that sink in for a second. I'm going to buy it first thing in the morning for whatever it opens up at. Then I'm going to turn around and sell it for basically the exact same I just paid for it. Now, does that make sense? No, it doesn't make sense. But let me explain why it should make sense. Because if I buy it tomorrow morning, 96.42, okay, it's current price, 96.42. I'm going to sell it to someone else for the same price. Well, let's get 96, which is less than what I paid for it. Now, wrap your head around that one. If I'm buying it for 96.42 and I'm selling it for 96, I'm still walking away with 1% profit. I'm going to say, who gets that? I mean, does that make sense? Think about it. I'm buying it for 96.42. I'm selling for 96, and I'm still walking away with a profit. And we already looked at the chart. It's in an upward trend. Does that make sense? Buying it for 96.42, selling for 96, and still walking away with a profit. So here's the thing. If the stock goes up, great, I get a profit. Stock stays the exact same, doesn't move at all. Doesn't move at all. I'm still walking away with a profit. Now, the stock can go down just a little bit, and I'll still have a profit as long as the stock is above 96 come this Friday. So, a covered call, basically buying the stock, selling the stock, collecting the premium, and then moving on to the next one. I'm looking for 1%. So let's see if this is going to work. Okay, you ready? So Uber, do I like it? I'm a little iffy on it, but someone else wanted to take a look at it, so I'm going to show it to you. So here we go. Uber, 96. Yay! All righty, he's just going to do one contract. 96, right there. One contract. So you get a good idea what one is going to cost, or one is going to profit you, or one's going to, the numbers. We need to see what the numbers are. Now, if you're not familiar with investing, you put your money on the line at risk. And we get a rate of return. We either sell something for a profit, or we buy something low enough, wait for it to go up, and then sell it. Well, what we're looking for is safe, predictable profits. That's what I'm looking for. I'm 61. I have no desire whatsoever to go for whatever job I qualify for. Good evening. Welcome to Walmart. Would you prefer paper or plastic? Thank you very much. Oh, the eggs are in aisle number 7, down towards the end. As far away as you pop. No, it's not for me. Okay, I have no desire whatsoever to go back to work. My very first job was in 1973. Okay, 1973, worked at Old Man Simmons Farm. Was it 1974? It gets a little foggy back then, you know what I mean? I think it was 1974. 1974, my first job, I think. I don't know. But anyway, it's over 50 years ago. So I've been working for over 50 years, And I think I'm entitled to take a step back and say, all right, you young bucks, you take over. That's basically what we do. As we get older, we let the younger crowd take over. They raise their families, they run the country, and we kick back and relax. Okay, so let's figure this one out. All right, so if I'm buying it first thing tomorrow morning, 96.42, I'm going to sell it at 96. So let's see what that trade looks like. Confirm and send. Here it is right here. This is the trade right there. Okay, read it slowly to make sure you understand everything that's in there, because it looks like a big old run-on sentence. I know Mrs. Fader's back there watching my English teacher. She's like, James, that's a run-on sentence. That doesn't make sense. Well, Mrs. Fader, actually it does. Here we go. You ready? Buy one covered call Uber. Break it down, compartmentalize one little bit at a time. Buy one covered call Uber. 100, which is the weeklies. The 31 October 25, that's this coming Friday. That's all that means. The $96 call option against the stock at the market to open. That's just the order. What is it saying? Well, it's saying that I want to buy one covered call of Uber, and then I want to sell it to someone else at 96, which is less than what I just paid for it. That makes no sense. But hear me out. Let's keep on going with the flow. Okay, max profit right there, $140.50. So if I'm buying it and then I'm turning around and reselling it, I'm collecting what is called the premium. Now, if you don't understand what a premium is, if you are over the age of 18, then you are required to have either renter's insurance, homeowner's insurance, car insurance, health insurance, whatever insurance it is. And that insurance, well, it has a certain coverage. It covers a certain type scenario, whatever you're insuring. Well, with those insurance policies, you have what is called a premium. Monthly premium, annual premium, whatever it is. You have to pay for your insurance. Well, basically, call options and stock options are insurance policies. If you think your stock is going to go down, you buy a put. As the stock drops, the put increases in value, so you don't lose anything. Okay, if you think the stock's going to go up, well, you buy this, you buy a certain option to make sure you don't lose any money. Well, it didn't take long for people to figure out, well, if I take this life insurance policy, not life insurance, sorry, if I take this insurance policy against this stock position, I can collect the premium, and that premium offsets anything, and I walk away with money. Well, that just makes sense. It's called the covered call. So I'm going to buy it at the market first thing in the morning, 96.40. I'm going to sell it at 96. I'm going to collect 140. Now that is going to cost me $9,460. Now don't panic, okay? It's not as if the money just disappears. No, you're actually investing in the corporation. So anytime you buy a stock, you own a part of that company. So if I buy 100 shares of Uber, I own a small portion of that company, which entitles me to a portion of their profits if they pay out profits. Okay, so there's two different types of companies, only two. There's the dividend companies. Those ones, they take their profits and they give it back to the investors. That's us. That's me and you. We are the investors looking for a portion of the corporation's profits. Well, the other companies, they take all that profit and they put it back into the company for capital growth. So if you're here looking for capital growth stocks or a capital growth opportunity, you're in the wrong place. It's not what I'm looking for. That's not my main focus. My main focus is simple, safe, predictable, consistent, weekly income of at least 1% of whatever my portfolio is. So if I have 50 grand in my portfolio, 1% of that is $500 a week. Well, if I have 100,000, 1% is $1,000 a week, every single week. So if I get 300,000, I want $3,000 every single week. That's 1% of my portfolio every single week. I got to say it over and over and over again. Some people just don't get it. Okay, now 1% every single week is over 50% per year. All right, so if 50% per year sounds interesting, well, great. Maybe this might be helpful to you. But remember one thing, this is not as, set it, forget it type scenario. You actually have to be involved. Okay, so when you get to my age, okay, you want when When, when you're on this side of the fence and you're retired, you got a couple of things you got to take into consideration. Where's all the money coming from? What do I mean by where's all the money coming from? Because as a human being, we're the only species on this planet that's got to pay to live here. Believe it or not. And to the degree in which you want your lifestyle, you need more money. It's just plain and simple. Okay, you want to live on the beach? You have to have enough cash flow in order to be able to live on the beach. You want to live in the mountains? Great. You need a cash flow in order to be able to live in the mountain. However you want to live, when you get retired and when you step back and say, you know what, let the younger generation take over, let them do the work. Fine. Okay, but the money's got to come from somewhere. So when you get this age, you get two choices and only two. And I'm terribly sorry if anyone told you you got more than two choices. See, I remember back in the 60s, we had two choices, chocolate or vanilla. That was it. We were happy as hell when they came out with strawberry. We were. Think about it. And then television. It was ABC, CBS, NBC. That was it. Three choices. Okay, so for those younger group who think choices are everywhere, no, they're not. When you get to my age, 62, and you're going to retire, you get two choices and only two. You do the money yourself. That means you learn and you invest yourself, or you give up accountability and you just give it to someone else to take care of it for you. Now, don't get me wrong. It's a great plan. I actually take care of people, people's money for them because, they don't want to be bothered, or they have enough where my tiny little sliver is meaningless. And, I'm doing it. It's like, okay, that's nice. Anyway, so the max profit on this particular trade is 142. It's going to cost 9,400. Now, just think, I'm going to own a portion of this company for 9,400, and it's going to give me a cash flow on a weekly basis until I decide to sell it. So as soon as you buy shares, whatever they are, if you're going in with the intention of creating, now this is something a little bit different, creating a weekly cash producing asset. TJR, thank you for that. Think about it, a weekly cash producing asset. A gumball machine, a candy machine, a vending machine, a taxi cab, a boat if you're going to rent it out, a house if you're going to rent that out. Whatever you're buying, whatever you're investing in, is it giving you a cash flow? Is it giving you a weekly cash flow, monthly cash flow, annual cash flow? Okay, see, we're here specifically, this my assumption, is to figure out how to create a safe, predictable cash flow. All right, well, great. Uber, here we go. Let's get the calculator, figure out what this rate of return is. Okay, so to figure out the rate of return, you take the profit, 142, and you divide it by the investment, 94.58, just to give us the rate of return. Kate, that was hard to hear. I'm sorry about that, Kate. All right, so clear this. Profit, 142. And we're going to divide that by the investment, 94.58, grand total of 1.5%. Now, don't get me wrong, 1.5% is not bad. Because if 1% a week is 50% a year, well, 1.5% has got to be at least 75, something like that. So I'm going to save this trade. Now, my son was up here and he taught me how to save this. Okay, so up in here like this. Bring this one down here like that. Bring this one open there like this. And there we go. Love it. See? That was pretty easy. Hold on. Let's do this. Back to there. And here it is right there. There it is. And this is the one we just did right there. There it is. And as you recall, this was 1.5%. So what we're doing now is we're saving all these trades for the week. These are all the ones that we came up for the week to see if you actually like them or if you agree with them. So Uber, 1.5%. Whoops. Yeah, leave it on red. 1.5%. Cool. Now I'm going to take it, make it smaller. Put it right there. All right. This was last week. Whoops. Oops. Okay. Nope. All right. Let me make that one smaller. Put you back where you belong. Right. Come on. There. All right. Right there we go. All right. All right. This is what we came up with last week. All right. So last week we had Adobe. We had Pfizer. We had Ford. We had Humana, and we had Kohl's. This was last week. Okay. Now, Saturday, this right here was something else. So I'm going to erase this. This is not that important. That was a different strategy. We're not teaching that one. Not here, anyway. Oh, wow. Oh. Ha ha! No idea what the hell I just did. Oh, well. Have no idea what I just did. Okay, so anyway, that is Uber. Great, wonderful. I'm going to write Uber down 1.5%. What do we have next? Uber. 1.5. Yes, I write them all down. Not only do I put them on my computer, I write them down because I don't trust the computers. I just don't. It is what it is. Okay, D. Wenzel, how are you today? Alrighty. All right, questions. Here we go. So next on the list, let's get rid of this one. Let's get rid of this. Let's put this back to where we were, and let's put this there, and here we are. Alrighty, back to where we started again. Okay, Kate, that was hard. I'm not quite sure what you mean by that, Kate, but alrighty. All right, let's go back to more questions. All right, so I'm going to read the questions. Now, you got to forgive me just a little bit. We got 9 platforms, 9, but I've only got 6 screens of sets of questions. And these guys over here for X, they never ask any questions. So I broadcast on X, which is Twitter, and nobody ever asks questions on Twitter. I have no idea why. All right, anyway, what do we have over here? D. King, Cesar, how are you doing today? E. Dub, all right. St. Martin, how are you today? Jay Hawker, good evening. Callie, Miata, Jeff, Hercules, TikTok, Willie, Kate, good evening there, Miss Willie, and how are you? Miss Kate, sorry. Callie Miata, Kate, got it. Kingdom of My Creation, cool name. Joel Lopez, que pasa, amigo? All right, so Hercules wants to take a look at VFC. Now, Hercules, I do have some VFC. And look at that. Doesn't that look lovely? Now, every time I look at a chart, it takes me 3 to 4 seconds, and I'm looking for 5 things, okay? Before I do anything else, it's this. 5, you ready? High, low, where was it? Where is it? Up, down, sideways, and then up. That's it. It takes 3 to 4 seconds to see that. And if that's okay, then I move over to the numbers right here. So if I'm buying it, 1661, 1650 is the closest, 108. Oh, hell yeah, that's more than 5%. If I like VFC. And that's always the big question, because the trading strategy is simple. It's just a covered call on a good quality company. Well, the question is, do I like VFC? Well, let's check out the numbers. I need the glasses for this one. Okay, a year ago, we were at 1695. The high of the year was in the end of January. It was 29.15. Now, this is something you really got to be okay with. The high of the year, 29.19, 29.15, whatever. And then she drops from 29 all the way down to $9. That's a 60% drop, or a 66% drop. Okay, $29 all the way down to $9. Can you do that without panicking, without selling, without saying, I want to save whatever I have. You could do that. Now, as it's dropping, okay, you could jump out at 20, and once it's 9, as she comes back up, you can jump back in again if you're okay with that. Well, I don't do it that way. You know, I look at a good quality company. Where is it right now? Right now, it's right here. It doesn't look that good. It kind of looks good, but not really. Let me explain. Okay, here's the high of the year, 29.15. Here's the low of the year. Then she slowly goes up to where we are now, 16.61. Fine. Well, let's look at the last 30 days. The last 30 days gives me a good idea of, do I want to jump into this now? No, I don't. Look at it. Okay, 30 days ago, we were at 14. She shoots up to 15, drops down to 13, then shoots up to 16. Now, you may think from 13 to 16 is not that big a deal. It's $3 on a $13 stock. That's over 20%. From here to here is a 20% increase. And it's at a 30-day high. As much as you might love that, great. No, it's not time for me to jump in. See, I would have jumped in not here at the bottom, because I'm not going to blow smoke. You know, hopefully you know what that means. Okay, I'm going to tell you the truth. Okay, if I find 30-day top, comes down to a 30-day bottom, I want 2 days to the upside, 1, 2, and then I'll jump in on the third day, which would have been right here. And then I would have enjoyed, you know, that drop and then the ups. Okay, so I'm not going to tell you find the bottom. No, that's a bunch of well, you know what I mean. It's a bunch of crap. Okay, here's the top, comes down. That's just a bottom. That's all that is. And no, I'm not very good at picking bottom. So when a bottom shows up, I want 2 days to the upside, 1, 2, and then on the third day, I will jump in right there. So I missed out on this to this. And I'm okay with that because that's not what I'm looking for. What I'm looking for is a good company that's consistently profitable. That's this one. As it hits the bottom here, 2 days up, and then on the third day, I'll jump in and I will take this ride right here until I get my 1%. Get my 1%, I jump out, and then I jump into something else. Because every single company is doing the exact same thing. They're going to work, they're clocking in, that little time clock, and they're putting in their 30, 40, 50, 60 hours a week. They're contributing to society. Oh, great. Well, they're all got the same thing in mind, to do a good job, have a good service, and to be productive and profitable. Well, if they're all headed the same direction, I just want to, jump on for 1% for this company. And then when this gets a little too high, like where it is now, I'll jump off of this one and then jump into something else. But I'm always working every single week, week after week after week. I jump in on a Monday. I like to be out on a Friday. And then the following Monday, I'll jump back in again and find something else. There's over 10,300. You know what? We haven't looked yet. So let's look right now. We haven't looked this week yet. So let's see how many stocks are available. Okay, for that, we go to the exact same spot we go to each time. And that is FinViz. FinViz. Now, FinViz, if you don't know who they are, they're a financial visualization company. Okay, they just give you details on stock information. That's it. Okay, so here she is right there. FinViz, financial visualizations. You can actually do a lot of research here. Now, I like the screener. People ask me all the time, James, do you use a screener? Yeah, I do. Right there, the screener. Okay, just click on it. It's a free tool. Just go and use it. All right, so the screener. What I'm looking for, I don't want that. What the heck is that? FinViz. Where the heck is FinViz? Right there. Okay, I don't want that. And I don't want that. I want this right there. The screener. There it is, right there. Okay, so you guys wanted to know? Here's the number right there. 10,000 587 different companies. Now we can go and do whatever searching you want to do on this financial website. Right here, dividend yield. Just clicking that one is going to eliminate all those companies that do not have dividends. Dividend yield, positive dividend. Okay, so how many companies have a positive dividend? Are you ready for this? 5,925. That's it, just 5,000. So out of 10,700, there's only 5,000 that actually have dividends. So those other companies, I have no desire for them whatsoever because they don't share their profits. Well, next, I want to take a look at options. Which ones have options? Because the only way I'm going to get weekly cash flow is by using weekly options. So if I come over here to the options, now unfortunately, it doesn't tell me whether they're weekly or monthly options. But out of those 5,000 different companies, only 3,481 actually have options. So we get that 10,500 different companies brought down to 3,485, like 3,500. That's it, just 3,500 have dividends and options. Well, great. Out of all those, how many have weekly options? Because remember, I want weekly. I want weekly cash flow. Okay, whatever you guys doing, hey, perfectly fine, absolutely. What I'm doing, investing for weekly cash flow. All right, so that's that. I use that every once in a while. Don't really need it anymore. Don't need that anymore. Don't need that. And we're back here on Yahoo Finance. All right, so that being said, great. If you like VFC, those are the numbers. I wouldn't do it because this here, 20%. Yeah, no, thank you. Okay, so what is next? What's next? What's this? But tomorrow in sub, okay, whatever. All right, Raining Guck. Gina, are you selling covered calls? Absolutely. They just make sense. They're simple, they're easy. What other questions do we have? BP, how are you today? Dan, how are you doing? Charles, Michael Concord, how are you doing? The automated min. Okay, whatever. My Jackson, Kevin, Liv, good evening. Michael, good evening, good evening. Covered calls, yep. Kane, I still don't know what to do. Uh-oh. Who's that? Somebody just said, I still don't know what to do. That was Mark. Okay, Mark, hold on a second. Oh, Kent, hold on. Why not do a CSP first? We're going to get to that question in a second. I'm just going to go back to the beginning and get some of these questions. All right. What do we have? VFC, we looked at that. Solar Man, Jeff Pratt, how are you today? Mark the Plumber. Kane, thank you for that, Kane. Okay, subscribe to me, go, okay. All right, some comments were filtered, blah, blah, blah. Was hard to hear, sorry about that, Kate. Vic, how you doing? Tango Papa, what's going on? JMF. Paul Officer, good evening. The Guy Ricky. Declan Barnes, good evening. Thank you there, Chris. Lori, good evening. Manny, good evening. Big G. Thoughts on VDY for us Canadians? Draz, I'm terribly sorry. I really, really am. Okay, if it's not listed here on the U.S. stock market, I'm not going to be able to look at it. Okay, terribly sorry. We can't find that symbol. Sorry. I don't know anything about the Canadian market. I don't know anything about the European markets. Frank Castle, how you doing? Joe D, what's going on? Berg, the investor. What's happening, Berg? Okay, C.A. Smith, M-O-H, Molina Healthcare. Now, don't take this wrong, C.A. Smith. I've never heard of M-O-H. Okay, and it's going to be a no for me. Okay, C.A. Now, the reason, Mr. Smith, why it's going to be no, I don't do monthly options. Because remember the part where I said rule number 4, weekly options only? November, December, January, March, blah, blah, blah. Those are monthly options, which means I can only trade them once a month. And if I can only trade it once a month, guess what? I'm only bringing in 12 to 24%. Well, that might be okay, but it's not what I'm looking for. Okay, so I like weekly options. Okay, I'm retired. I don't have, very much to do. So for my pastime, I trade 10 to 15 minutes a day. That's it. Okay, so for the rest of the day, today I was out boat shopping. We went and looked at 3 boats today. Okay, so for those you don't know, I want to go do the Great American Loop next year. And yes, I'm going to bring my screen with me and all my cameras, and I'm going to do it as I progress throughout the loop. And one of my other channels is going to be the adventures that I do when I'm going to all these different places. Okay, so sorry, C.A. Smith, it doesn't fit. Trapper Todd, what's going on? Mark, how many companies does a person need? Now, Mark, I'm not 100% sure what you mean by that. Most adults don't understand covered calls either. Mortgage Magician, you're absolutely right. And it's nice to see you back again. It's also nice to see you being a little nicer. Who? I have no idea, Mortgage Magician. Who? Texas Shack, what's going on? Uber is awesome. Hold forever. Oh, hell no. I don't hold anything forever. New investor, I have $20,000. How should I invest? Now, Manny, what I'm going to tell you, I tell to everyone else. Number one, I don't give tips. I don't give advice. Okay, just an observation. What you should do, hypothetically, Manny, is to practice first using a paper trading account. I'll give you a quick little idea. Okay, see this right here? That is a live account with cash in it. This here is a paper trading account. I've been trading for over 30 years, and yeah, I still paper trade. Up here, see all those? Okay, I got 7 accounts, 6 of them are real, 1 of them is a paper trading account. I still paper trade. Practice, practice, practice. You talk to any good athlete, Michael Jordan, Larry Bird, Scottie Pippen, all the greats. They practiced every single day to get where they are. Okay, Mortgage Magician, why not do a cash secured put first? Now, Mortgage Magician, you and I had this conversation a few months ago, and I'm going to tell you the exact same thing I'm going to tell you this time as I told you last time. Okay, the trading strategy I am giving away for free. Throughout the whole night, you will not hear me say one thing. Hey, I got this something for you to buy. We're all adults. We know how it works. Yeah, I've written books. Yeah, I get this. Yeah, I get that. I'm not trying to sell you anything. I'm creating a video diary for my children and my grandchildren. So I'm not going to do you a sales pitch. So why not the cash secured put first? Well, that's called the wheel strategy. There's absolutely nothing wrong with it. And yeah, it works just fine. However, okay, Mortgage Magician, this was created for my 9-year-old daughter. And you are giving her more credit than she deserves. Now, I love my daughter, really do. Let me break her out so you can see who we're talking about. Okay, that being said, in 2008. Okay, so here's my website. We all know that. Okay, that 10-MinuteTrader. Go right to here to, yeah, I got to update this. It's crappy. But, hey, it's better than nothing. So I'm going to go to YouTube. That's all my social media. Well, some of my social media. Okay, so this is not good. There's only one. Why is there only one live? There's supposed to be 2 live. Damn it, the other one's not working. Okay, why is it not working? Let's try it one more time. Okay. All right, so there's supposed to be 2 live, there's only 1. All right, so let's go to videos. We're going to introduce you to the princess first. Videos, and then we're going to go to the oldest video, and there she is right there. Are you ready? Here she comes. Oh, now that's interesting. That's not working either. Where the hell is all my words? Well, anyway, there's the princess right there, and it takes the fun out of it if you can't hear it. There's me. All right, so I have to figure out. Now, my son did come up the other day to help me with, what's going on. So there's a possibility, what a goofball, possibility that there's no sound for some strange reason. Let's get out of there. All right, let's get out of there. We don't need to see that anymore. All right, that being said, let's get back to where we were. So that was the princess, 9 years old. Well, she wanted to learn how to trade. Great. Try explaining cash secured puts to a 9-year-old. That was hard enough to explain to her the 5 rules. And it was 10. The reason why it's called the 10-minute trader was so that my 9-year-old daughter didn't have to spend more than 10 minutes in front of the computer. Because that's what, I mean, how do you keep the attention of a 9-year-old? Doesn't work that way. The profit is the call. You should say that. Mortgage Magician, thank you very much. Oh, Big Brain, Plains All American. Big Brain, we did this last night, and you do the same thing with the other stock you keep asking me to take a look at. Plains All American, we looked at it last night. As much as you like it, what I don't like about it is right here. Okay? This. Right there. The insurance policy. The call option. If I'm buying it at this price here, $16.91, I'm going to sell it at 17, and look what I'm getting is 0. So I don't like the premiums on Plains All American or Energy Transfer, same thing, bunch of zeros, and AGNC, a bunch of zeros. So if I'm going to do a covered call on them, I'm not going to have the profit that I'm looking for. So not every single stock, even if you like it, is going to pan out to be a good fit. And that's why it's no. That's a no. Because it just doesn't fit. Okay, Nikki Bay, how are you today? Kent, you helped me on my stock journey, and now I'm up 81% year to date. Cool beans. Nicely done, Mr. Kent. You're actually beating me because I think I'm up 60, 70%, something like that. But you're actually beating me this year. Nicely done. Hercules, rope revision, what's going on? Lon Perry, we can't see it from here. Okay, so Lon Perry, oh yeah, didn't I just say that wasn't working? Hold on a second. It's supposed to be live on YouTube. That ain't it. That's it. Back to YouTube. Is it live on YouTube? Is it? Is it? Is it live or is it Memorex? Do you remember that commercial from was that 70s or 80s? Is it live or is it Memorex? YouTube. All right. There it is now. Now there's 2. Okay, there's one and there's the other one. So there's 2 live streams on YouTube. One is me standing in front of the screen. Okay, and the other one is just the screen itself. Okay, so just the screen itself, that way you'll be able to see all those little tiny numbers. Okay, next, Mark, I still don't know what to do. Well, Mark, I'm not 100% sure if you're new here or if you've been here before. Okay, but I'm here every night, Sunday, Monday, Tuesday, Wednesday, Thursday. Now, I do take Friday night and Saturday night off. Last year, it was 7 days a week. Well, I got a little burned out about that, so this week I am taking 2 nights off. That being said, what am I missing? What am I missing? All right, thank you there, Kent. Oh, so as I was saying, Mark, keep showing up, keep asking questions. All you got to do is, if you want, Mark. Now, I say this to everybody every single night. If you want, go into whatever platform you're on. Okay, whether you're on TikTok, whether you're on YouTube, whether you're on Instagram, whether you're on Twitter, whatever you are. There is a bio which will tell you everything you need to know about me. So, and there's a link there. You can send me an email. So send me an email or a text with your phone number. I will personally give you a call yourself. Me, personally, I will personally call you. And then we can talk about what it is you want to do. And I will promise you, 100%, I will not try to sell you anything. Nothing. Okay, all I'm doing is offering to help. Send me a phone number, I will give you a call, and we will chat. All right. How you get 100 a week? Not quite sure 100 what a week, Mark. $100 a week, 100 trades a week, 100 slaps in the face a week. St. Martin, what happens if you do a covered call and the stock drops 5%? Well, I hate to be the bearer of bad news, Mr. St. Martin. Take a look at this. Okay? Down, up, 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 down. That's all they do. They go down, they go up, they go down, they go up. That's it. Okay, if you like a good company, rule number one, never buy something you do not want to hold on to long term. If it drops 5%, big deal. Okay, right here, $10.60. It dropped down to $7.80. Well, what kind of a drop is that? Okay, a 5% drop on a $10 stock is only 5 cents. That's it. You should start to worry when it goes from $10 down to $7. That's $3 drop, which is a 33% drop. Okay, then she went up, then she went down, up, down. That's all they do. They go up, they go down. The idea is to keep a good eye on where it is. Pick a good company that consistently increase their profits year after year after year. So if you buy a company and every year they give higher and higher and higher dividends, well, that should be just perfect. This here, what I'm teaching you now, it's kind of like icing on the cake. So yeah, you buy the stock. Wonderful. You love it. Great. Joy. Okay? Now, every single year, if they're doing a good job, they will increase their profits. They increase their profits, great. You get more money. Isn't that what we're doing? But covered calls on a weekly basis. Not only can you collect the dividends, you can collect weekly premiums. And if you pick the right stocks, those premiums can be relatively nice. Okay, so for me, I don't look for dividends. Now, yeah, I use dividend stocks, and there's a reason why. Let me tell you why I use dividend stocks. Let's get out of here. Let's go right to there. Give it a second. There it is. And, okay. This behind me is what is called an EX dividend calendar. EX dividend calendar. Basically, every single dividend stock, remember there was like 3,500 of them, every single one of them is represented by one of these little green dots. See them? All those green dots? Now, when it comes to dividend stocks, there's 4 dates to remember. 4 dates. Date number 1 is the announcement date. That's when they say, hey, everybody, this is James from Dividend Stock Talk. We made so much money this year. This is how you're going to get yours, and you're going to be so happy and wonderful. Okay, that's the announcement date. They just tell you what's going on. The announcement date, number 1. Number 2, very important, the EX dividend date. That, my friends, is the last day the stock trades before the dividend is paid. So if you want to collect a dividend on any one of these companies, oh, look at this, Apache, Clorox, Lowe's, nice. If you want to collect a dividend on any one of those companies, you have to buy it before the little green dot. Okay? Date number 3, the date of record. Whoever owns the stock on the date of record is entitled to the dividend. Plain and simple. You own it on the date of record, you get the dividend. It's kind of like going to the store. You show up at a store and it says, we are open 9 to 5. You show up at 8:30, guess what? You ain't getting in. You show up at 5:15, guess what? You ain't getting in. It's plain and simple. If you own the stock on this day, the date of record, drawing a blank. If you own the stock on the date of record, you're entitled to the dividend. Plain and simple. That's it. Date number 4, the payment date. That's when you get paid. Now, why am I telling you this? Why is it important? Because the stocks that have dividends, that have consistently increased their dividends, they do it every 90 days. So regardless of whether you do it at the beginning of the month on the 1st, or whether you pay your dividend on the last day of the month, now it doesn't look like anything's there, but there's 47 companies. There's a little tiny number, it says 47. There's 47. They couldn't fit them all in here. So whether you pay on the first day of the month, the 1st, or the last day of the month, okay, there's over 3,500 different companies all paying a dividend within a 90-day time frame. Think about it. Within a 90-day time frame, 3,000 companies are paying a dividend. And they do it every 90 days. The first quarter, January, February, March. Second quarter, April, May, June. Third quarter, July, August, September. Fourth quarter, October, November, December. We are in the 4th week of the first month of the 4th quarter. We got Friday. This Friday is the last day of the month, which means we have 2 months left to the end of the year. How are you guys doing? I'm doing pretty damn good, but, how are you guys doing? All righty. Zach Rachter. Greetings from Zach. Are you investing in XRP and XLM as recommended? No, I am not, Zach, because as far as I know, XRP and XLM dividends, and they do not have weekly options. So no, Zach, but thank you. Kaden, how are you today? Hercules, thank you. User 86704 wants to take a look at Suncor, S-U-N. S-U-N. Surgical Innovations. I guess I was wrong. Okay, sorry. Sunoco. November, December, March, June. Terribly sorry, user 86704. I don't do monthlies. The numbers just don't work. Hercules, we already looked at VFC. Sally, we already looked at Verizon. Yep, we looked at Sun. We already did. Do you really have to pay the $9,000? Okay, G18. Do I have to pay $9,000 for what? I have no idea what we're talking about. Jamil, how you doing? Kendra is my name. How are you doing, Miss Kendra? Okay, when do you decide to open these contracts? Monday morning. Who's that? That was Jay Smooth. Jay Smooth. Okay, Jay. Monday morning. Dave Saint, good evening. Why are baby elephants so cute? Give me a second. I'm going to maintain my composure here. ETHZ. Carson, what's ETHZ? That's a hell no. Nope. ETHZ. Monthlies. I don't do monthlies. Simple question. Simple. No monthlies, please. Samron, James, Uber has no dividends. Did you change your strategy? No, Samron, I didn't change my strategy at all. Somebody asked to look at Uber, and I looked at it. I said I didn't like it because they haven't been around long enough. That's me. Okay, Dooley Drama. Weekly options, not weekly dividends. Thank you. Jay Smooth, can you move the camera a bit so we can see the entire screen? There we go. Moved it a bit. All right, Jay Smooth. Sushi. Good evening, Sushi. Kate, Verizon. Kate, we already looked at Verizon. Okay, I don't want to look at it again. Charles, good evening, Charles. Serene Wave, how are you? Vincent, good evening. Mo, hey, so ASST just blew up recently, has high volatility right now. What are my thoughts? Hell no. That's my thoughts. Mo, what do you think? Was that quick enough? Hell no. I don't do stocks at 50 cents. Okay, now, Mo, how can you tell me and have me believe that a company that was 50 cents a few weeks ago has 2 decades, 20 years of increased profits at 50 cents. 20 years. Yeah, no. Nope, sorry. Nope, nope, and nope. Ooh, Kane Adams wants to take a look at Micron. Micron. Hell no. Now, Kane, I said, do not show me anything that's at the high of the year. There's no opportunity there. None. Unless you want to do, puts and other things that want the stock to drop. I don't do that. I'm looking for positive to go up. QTBS. Michael, what is that? QTBS. QTBS. Okay. Michael, sorry about that, but we cannot find that symbol, which means it's not traded in the US. That's all that means. Thank you there, Kane. All right. Thank you, Kane. Sammy, hey, buddy, can you check Coca-Cola? Gotta love Coca-Cola. They've been in business for over 140 years. Take a look. Okay, here's the high, here's the low, here's where it was, here's where it is. Look at this, down, up, down, up. What's going on? Well, let's check it out. It's currently at $70. The 70 is going for 51 cents. Sorry, dude, I don't do less than 1%. Okay, 1% of Coca-Cola, $70, would be 70 cents. Okay, 1% of $70 is 70 cents. But if the 70 is going for 51 cents, that's less than 1%. Now, don't get me wrong, 55 cents on a $70 stock, that's got to be at least 0.7%, almost 0.75%. Well, that's not bad. Was that 30% per year? If you're okay with that. Well, I'm not okay with it. I want 1% every week. This is less than 1%. So no, I don't do Coca-Cola. Mo, ASST, please, it's interesting. Yeah, I looked at it. I gave you my opinion. I said no. Okay, that's a no. Mo, it's really not that difficult, Mo. Okay? Company's got to be at least 20 years of increased profits. Okay? ASST, no. It's not there. I don't even have to look. Okay? Because if it was 50 cents 6 months ago, there's no way possible it can have 2 decades of profits. Wild and out. How are you this evening? SpaceXXXX. Okay, hello. Jannard, what is one of your favorites? Macy's. Ooh, Kutchi wants to take a look at K Vue. KVUE. Interesting. Uh-oh. Yeah, Mikey's saying the same thing. Why would someone do a covered call if the premium is 0? You're absolutely right, Mike. Certain stocks, the premiums are horrible, so I just don't do them. I gotta go back here, see what kind of questions you guys have. Sorry, it's not that I'm ignoring you, it's I have way too many questions. Gina, yes, I'm selling covered calls. Thank you, Gina. Raining Cock, how are you today? Bvik, happy. When did you learn? Okay, I learned, oh my goodness. Well, actually, I'm in a constant state of learning. That's a good way of putting it. I'm in a constant state of learning. Let me think. When I got out of the service in 82, okay, I got out of the service in 82, I joined this guy doing museum exhibits. So when he left, okay, I basically took over the shop. And I made so much money, I had to figure out what to do with it. So I basically started, I believe, in 1990, 91, because I made so much money, I had to figure out what to do with it. Too small, can we zoom in? Okay, so 530380. Why couldn't your parents name you Bill? Bill's easy. 530-380-3018-038. Do they call you that every time for dinner? Yo, 30, yeah, whatever. Can we zoom in? No. Terribly sorry. Okay, this screen here behind me is live on YouTube, which means if it's live on YouTube, you can pick up the little phone that you're on, or laptop, or what do you call it? tablet. Go in the other room. Throw the kids off the big screen TV. Say, hey, daddy and mommy want to look at the big screen TV. Okay, that's why it's live on YouTube, so you can see these little tiny numbers, because you can't see them on your phone. Okay, this is being recorded, so you can go back to YouTube and re-watch whatever episode you want to watch. Okay, there's over 1,200 different episodes every single night. Okay, for a very long time, I've been doing this exact same thing, teaching the exact same thing, the exact same way, the exact same words, the exact same stocks, because it never changes. Okay, think about it. Coca-Cola has been paying dividends for 140 years. 140. I just started this little venture a year and a half ago, or 2 years ago. That's it. 2 years ago, I started. Well, Coca-Cola is still making Coca-Cola. Okay. So, thank you, BP. That was nice of you. When do I sell? When it hits my target. Think about it. Okay, if I'm buying K Vue at $15, right? So that's the current price, $15.08, right? I will buy it first thing tomorrow morning at $15.08. I will sell somebody the rights to buy it from me at $15, and I will pick up 33 cents a share. Well, that's a nice rate of return for 1 week, as long as the stock is above 15 come Friday. And if it's above 15 come Friday, guess what? Monday, I no longer have it. Someone else bought it, and I get all my money back. Think about that. If I buy it, $15.08, however many shares I buy, 1 contract, 5 contracts, 50 contracts, however many. Okay, if I sell somebody the right to buy it from me for less than what I paid for it, and then they buy it from me on Friday or Saturday, I'll get all my money back, plus I get to keep whatever profit that is. So for the fun of it, let's see what the profit on K Vue would be. Okay, let's take a look at the chart. Okay. High, low, where was it? Where is it? Look, it's sideways, down, and then up. That's it. Don't complicate it. Okay, well, you could do this. Up, down, up, down, up, down, up, down. Same thing, sideways, down, and then up. Basically, the overview, the big picture. All right, so it's at 15.08. Look at the last 30 days. What do you think? Okay, here's your 30-day high. She drops. Now she's going back up again. It's actually that simple. Adults, you people, have a tendency to make this more complicated than it needs to be. Remember, I showed you the picture of the little princess, 9 years old. Daddy, can you teach me? Well, yeah, I just wish adults were as easy to teach as my 9-year-old. It took me 15 minutes to teach her the whole thing. Rule 1, never buy something not on your list. Rule 2, never sell for a loss. Rule 3, make sure the company's profitable. Rule 4, weekly options only. And Rule 5, make sure the numbers work. What are the numbers? What am I buying it for? 15.08. What am I selling for? 15. What am I collecting? 33. Well, that's more than 1%. It's actually that easy. And then you just get rid of this because we don't need it anymore. Then we're going to go to covered calls. Okay, look. Here's all the different trading strategies. There's a whole bunch. I'm only giving you one for free. One. And that's this one right here, the covered call. You buy the stock, you sell it. You buy it for a certain price, you sell for the exact same price, and you collect the premium. And if the premium's more than 1%, great. That's 1% every single week. More than 50% a year. Now, it takes me 5 or 10 minutes every morning. What did I buy? What did I sell against it? Where is it at now? Where does it look like it's going? And what should I do next? Now, it takes me less than 30 seconds to do all those 5 things. Did you notice when I look at a chart? 3 to 4 seconds. When I look at the numbers, 3 to 4 seconds. When I look at my order, look. Let's take a look. Let's see how quickly you guys can do this. Let's get out of there. Let's go to there. Let's go to here. Let's go to there. And here we go. All right, so here's the order. Here's the stocks that I hold right here in this account, right there. Watch. I'll show you how easy this is. Let's move this over so we get to look at the chart because I want to see the chart too. All right, I want to see the chart too. All right, so HIMS. Let's take a look at HIMS, H-I-M-S. Okay, right, first thing I want to do, right click, view trade. There it is right there, the 52 put. Okay, great. Cash secured put. The 52, well, wait a second. That's not going to work. All right, there it is right there. Didn't work out quite the way I wanted it to. Okay, first, put the ticker symbol in here. Okay, here's the ticker symbol. The last 30 days, there it is right there. Last 30 days. All right. View trade. The 52 put back in October. The 52 is right here. That's it. It's a cash secured put. That's all. Don't have to do anything. Okay. November 7th. I got it pushed out to November 7th. I don't have to do a thing. What did I collect? I collected $6.10 on a $52 stock. That's a nice fat premium. Okay, so the next one. Simple, 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 simple. Coles, there we go. Whoops, Coles over here. KSS, there it is. Whoops. Coles, KSS. There it is right there. Last 30 days right there. And my trade right there. Okay, so I got 500 shares, 1638. I sold the 16s, I sold the 17s for November 7th. I don't have to do anything. Okay, and she's going up. Don't have to do a damn thing. That's how quick and easy it is. The next one, ooh, like this one, LUV, Southwest Airlines, LUV. There's the chart. That's what it's doing. Where am I? Here's my trade right there. Got 3,000 shares, 33. I sold the 32.50s. I picked up 138 for October 31st. That's for this week. Okay? I bought it for 33.32. I sold some of the rights to buy from me from 32.50. I picked up 138. I bought it way back in the end of September. Now we're into the end of October. So I've had it for four weeks. So every single week, I got 1%, 1%, 1%, 1%. So that's 4% just on LUV for 1 month. So what's going to happen? 32.50. Well, it's currently right now at 32.25. What am I going to do? Well, more than likely, I'm just going to roll it forward. How do you do that? Right here. You right click, create rolling order. Boom, there it is. Here's the number right there. Okay? I'm just moving it forward 1 week. It's not that difficult. It's actually really simple. I know. Let's get out of this. And let's go back to where we were. Okay, so back to some questions. So that's K Vue, if you like K Vue. So let's go back to K Vue. Where were we? KVUE. The 15s. So let's do the 15s on K Vue, see what it looks like, and see if it makes sense. The 15s right there. One contract, just one. At the market, there we go. And here's Johnny. Buy one, covered call, K Vue 100. That's the weekly. 31 October 25. That's this coming Friday. The $15 call option. Remember, I'm buying it at $15.08. I'm selling it at $15. Okay, I'm making a $26, whoop-a-dee-doo, $26 profit on one contract. One contract, $26. It's only $1,400. Now, it may sound like a lot. $1,400, I'm only making 26. Well, think about it this way. Hold on, let's get the calculator out. Okay. If my profit is $26, well, that's interesting. There we go. My profit's $26. Okay. To find out the rate of return, you take the profit and you divide it by the investment, $14.74. Let's find out. $14.74. $14.74 gives me a grand total of 1.7% for 1 week. Now, I know $26 is not a lot of money, but it's 1.7% of the investment. 1.7, we'll multiply that by 52 because there's 52 weeks in the year. So 1.7 comes to 91% for the year. 1.7. If 1% is 50%, 2% is 100%. Well, 1.7 is 91%. Imagine that, 91% for the year for a company that only take me 10 or 15 minutes to find. Well, how many stocks are there? Well, we looked, 10,700. That's a lot. That's a lot of companies. And out of all those 10,700 companies, only 3,500 have dividends and options. Well, how many have weekly options out of those 3,500? Well, I only like about 300. That's it. Imagine that, 10,700 different companies, and I only like 300 because I only like companies that have 20 years, that's 2 decades of increased profits. 20 years. Now, you may think that's a lot. No, it's not. Stock market has been around here, stock market that you know of today, 420 some odd years. 1602 was the first dividend stock sold. First dividend stock. A promise was made to share the profits with the investors. They went door to door, invest in our company, and we'll share the profits with you. That's what promise. Invest in our company, we'll share the profit. Now, that company, the Dutch East India Shipping Company, okay, went on for 198 years and averaged 18% per year. 18% per year for 198 years. That was the average. The highest payout, I believe, was 78%. I don't remember exactly what year it was, but, you know, is what it is. Okay. Faber, I found the IBKR campus. Which courses should I take to study that's better? I can't answer that question. I have no idea. Jonathan, 3 boats today. Okay, Jonathan, I looked at 3. One of them was nice. Now, I really did like that one in Miami, that 92-footer. Can you imagine me on a 92-foot boat? A little impractical at the moment. I'd actually have to get all the kids on board to actually take care of that thing, because you need at least 4 people just to run that thing. It's huge. But anyway, the one we looked at today was 47, and that one I can do by myself. Fine. Anyway, we'll see what comes up, because I want to get it by at least December or January. That way we can take it for a couple of test rides around here before we do that 5,700-mile journey. 5,700 miles. That's a lot of miles to put on a boat. Michael, how are you doing? All right. Lord No Face back again. How are you doing today? Steve Mag, how you doing? Miss Pontiac, the Sonic Bond. What's going on? Digital Marketing Guide. Hello. G8, thank you for that. Kate, I feel bad about this. ZDGE. What the hell is that, Kate? ZDGE. Let's get out of here. Oh, wait a second. Oh! Okay. I want to save this one. Remember how we saved the last one? There it is. There it is. Yeah. All right. And up there, and there. Okay. Down we go. And what did we say the rate of return? Wasn't it 1.7? It was 1.76. All right. So we're going to save this one. All right, where did it go? Where'd it go? Right here. Where did she go? I don't see it. That's not it. That's not, what is this right here? That it right there? There's hymns. We already did hymns. Which one are we doing right now? K Vue. All right, that's him. That's not K Vue. All right, I don't know what that one is. Okay, let's go back to here. Let's do it one more time because it didn't save. All right. There it is. All right. Right to there, right to there, right to there. All righty, right there. There you go. Now, let's see if she saved. And right there, K Vue, it's right there. And it's 1.7. K Vue is Saved. There it is right there. That's small, man. Whoops. There it is, K Vue. Okay, 1.7%. All right, K Vue. Whoops. All right, we got to find one more tonight. One more. We got 3%, 2.1, 1.5, 1.7. And you guys say you can't find good stocks every night. What's the matter with you? All right, anyway, that's K Vue. What do we have next? ZDGE. What is that? ZDGE. Never heard of it before. ZDGE. Zedge Incorporated. Hell no. Okay, so Kate, why do I say no to that? November, December, January, April, these are months of the year. Kate, I can only do those once a month. So if I'm making 1 to 2% every trade that I do, because that's what I'm looking for. I want to get in, I want to get out. I'm not looking to hit a home run. Okay, I just want to get a small slice of the pie, 1%, which means I do it on a weekly basis. So if I'm doing a monthly, it means I'm getting 12 to 24%. Now, it might be working for you, but that doesn't work for me. I like weeklies, which gives me a lot more money. Holy cow, 1031. Let's answer some questions because we got a whole bunch. Holy shnikey, you guys got a lot of questions. All right, BP can't see the screen. All right, it's live on YouTube. Can we zoom in? BP when you sell, but tomorrow, buy tomorrow and sell tomorrow, Friday. Yep. Cadence. Oh, wait a minute. Chad Kane. How you doing, Chad Kane? I really respect you. Thank you, BP. Barefoot Bandit. Hello, hello, hello. Can we please review AT&T? Why? Why do we want to look at AT&T? Why? Why, Mr. Santa Claus? Why? Okay, you guys just gonna. Okay. Okay, so Zcash Miner. Halloween. What is that? Okay, so let's take a look at AT&T. Okay, here's the bottom. Here's the top. Okay, up, down, up, down. What's going on here? That looks like 2 days to the top, doesn't it? Oh, look at that. 25. The 25s are going for, hold on, 59. Oh, yeah, 25 50s. 34. Nice. Oh, who came up with AT&T? Any content category. Okay, interesting name. Okay, down, up, down. Here's your 30-day bottom, 30-day top, bottom. Now she's going up. Here's your 1, here's your 2. I'm still looking for one more day. Okay, because 1, 2, 3. Yeah, that's good. 23.50. 25.50. 25.50 is going for 34. So let's see. What does AT&T look like? Why not? Why not AT&T? We all know who they are. Out of the way. Get out of the way. Covered call. The 25.50s right there. One contract. There it is. There you are. There you are. And here we go. Buy one. Covered call AT&T. 31 October. 25.50 call option at the market. Blah, blah, blah. 33 is the profit. 25 is the investment. What is the rate of return? And do we even like AT&T? Is this something you want to buy, hold, and keep getting weekly cash flow from? I don't know about you. I like AT&T. Calculator. $33 is the profit. The investment, $25.17. Grand total of 1.3. 1.3. What's 1.3? 1.3. AT&T. Nice. I'm liking this. I'm getting the hang of it. Okay, give it a second. Come on. Okay, that didn't quite work the way I wanted it to. Okay. Come on. One more time. There it is. Where's AT&T? There it is right there. AT&T. See, someone said they couldn't read it before. You couldn't read it before, huh? How's that? Can we read it now? AT&T by one covered call. AT&T 31 October 25. The 25.50 call option. Here's the profit 33. 2,500 is the investment. What does that come to? It comes to 1.3%. 1.3%. All right. Now we're going to put it with these. All righty. All right. So we've got 1.3 AT&T, 3% for Marvel, 2.1% for Altria, 1.5% for Uber, and 1.7% for K Vue. That was just today. That's just what we found today. All right, so let's see what other questions we have. Okay, 10:35. We got lots of questions. What stock are you evaluating now? Jose, that was AT&T. Let's keep on going. Halloween, crypto mines. I don't do crypto. We already said about it. Sammy, yeah, let me give you some close. Never day trade. Don't buy options. Just do good, sound investing. Thank you, Sammy. I think so. James, you are helping a lot of starter traders. Yes, I am. Thank you. Halloween, Bitmain, Antminer, Z15. One of these produces $40 a day. Okay, thank you. If you have a room full of 20 of them. Okay, not quite sure what we're talking about. Crypto. Did he just create a covered call? Yes, I did. Better yield in crypto. Yes, but see, the funny thing is, Everstretch fixed variable 10% a month. Okay, so Halloween thinks crypto is a good idea. Now, Halloween, I'm going to agree with you and disagree with you at the exact same time. Let me see if you make sense out of this. You ready? Hold on for a second. All right, so Halloween, here we go. As much as we're not going to be able to escape cryptocurrency, which means, I don't know if you remember this, but years ago, decades ago, you had two choices and only two, cash or check. That was it. Okay, I don't know if you remember that far back. Some of you can, some of you can't. You had two opportunities to pay. That was it, just two, cash or check. And then, lo and behold, they came up with a charge card. Cash, check, charge card. That was it. And as time progressed, cash, check, charge card, PayPal, Venmo, Zelle, and then a few others. That's 6. So what's cryptocurrency? Cash, check, charge, Venmo, PayPal, crypto. It's just one more choice of way to pay for your stuff. Now, the thing is, I don't trust the government as far as I can throw them. If you do your research, okay, World War I veterans weren't given pay. That's where, what do you call it, back during FDR. After World War I, the veterans weren't paid, and the government screwed them out of all that money. Then the government went and turned around and said, all right, you cannot own gold anymore. Can you imagine that? The government says you cannot, it's illegal for citizens to own gold. Turn in all your gold. This was back in, I think, in the 30s or 40s. So, like good citizens, everybody turned in their gold. A couple months or years later, the government said, all right, you can now buy gold. However, you turned in your gold at $20 an ounce. Now you can have gold again, but it's going to be $30 an ounce. You just lost a shit ton of your money because the government decided to do so. And what are they doing now? I wouldn't trust the government. Look at the history of the U.S. government. They're not that nice to us. Think about it. So crypto, although we're not going to be able to escape it, because if you didn't know, okay, old Jojo already signed, or was it Barack? One of the boneheads signed the Digital Currency Act, which means all of your money is going to be changed to digital currency. So if you don't use it, you will lose it. That's one. If you do something stupid, they can turn it off. Now, remember what they did in Canada a year or so ago? They actually froze the money of those truck drivers because they didn't agree with what the truck drivers were complaining about. You complain, you do something, we're going to turn your money off. That's exactly what they did in Canada. It's exactly what they're going to do here in the US. So yeah, I don't trade crypto, but I'm going to create my own because, I'm doing this, I make plenty, so I can actually create my own crypto and use that. That way the federal government has no way of getting into my money. So no, I don't trade crypto because I'm totally clueless, but I'm going to be having my own because I don't trust the government. They call it decentralized finance. If you have enough money, you can create your own money. Because we can nowadays. You couldn't do it before, but we can now. So yeah, now I don't agree with what you're saying because, I don't know anything about crypto. All right, but I do know it's an alternative way of payment and the government can't touch it. But here's the thing. Most crypto has nothing behind it other than a wink and a nod from some guy at the other end of the computer, which you don't know who the heck it is. So I don't do crypto. So, and I haven't seen a single crypto yet that has weekly options that allows me safely, predictably, and consistently. Because you cannot tell me the crypto market is safe and predictable, because it's not. So you're probably asking yourself, why am I getting into it? Because I'm being forced to, that's why. Raven, Orion, how you doing? Franklin, how you doing, Franklin? Mar, thank you there, Mar. Franklin, bro, no lie. You layman the heck out of this for us. Thank you. All right, Franklin, you're welcome. Mac Jones, how you doing? Eagle 18. So 3,000 stocks have weekly options and dividends. No. That's not what I said, Eagle 18. What I said is 3,500 companies have options and dividends. How many of those 3,500 have weekly options? No, I don't know. But I only look at about 300. That's about all I look at. So do you buy the shares first, then sell the covered call? Actually, Gina, I do it all at the exact same time. Okay, buy the stock, sell the covered call. Yes, Eagle 18, yes, I still paper trade because I come up with ideas all the time and people suggest things to me all the time. And I don't want to throw real money at it. So I paper trade to see if it's accurate and see if it works. And if it does, maybe I'll try it. Larry, so in a nutshell, you don't do puts for the sake of simplicity. Larry, I do some, but I'm not teaching them here. And you're right, simplicity. I love my daughter, I do. But trying to explain something to her that most adults don't get was hard enough as it is. You start throwing in puts. Puts are extremely confusing if you don't understand them. Merv wants to take a look at Cisco. Now, I believe the Cisco you want to look at, Merv, has monthly options, I think. SYY, Cisco, monthly options. Yeah, there's two Ciscos, CSCO and SYY. This Cisco here has monthlies. I don't do monthlies, Merv, okay? Monthlies just don't pay the same, and they're a lot more effort, a lot more aggravation. Mike Sweeney, why would someone do a covered call with a premium of 0? Okay, Mike Sweeney, I'm going to agree with you 100%. I am. There's several companies, although the charts may look good, let me show you just a few of them. Okay? Now, some of you guys like these companies because you think they're good. All right, well, nothing wrong with them. Energy Transfer. Look at the chart. Doesn't that look nice going up? But look, covered stock. Wrong one. Single. Okay, 0.00019. That's horrible. Okay, AGNC, AGNC. Uh-oh. AGNC. This is 0.00000. I don't do stocks that have zero premium. It just doesn't make sense. And I have no desire to do this, to sit in front of the computer all day long watching that thing. I want to get in, I want to get out, I want to be done and over with in 10 or 15 minutes. Because that's what it was called. Anytime you see a video from me, hey everybody, my name is James. This is Dividend Stock Talk, brought to you by the 10MinuteTrader, which means you should be able to trade your whole account within 10 minutes. That's it. You just change your morning ritual. You get up in the morning, brush your teeth, do your hair, do your makeup, take a shower, whatever, have your breakfast, sit down for 10 minutes and take care of your money. Most people spend more time on a family barbecue or a weekend out than they do on their personal finances. And then when you get to 60 and you want to retire, it's like, where's the money coming from? It's got to come from somewhere. Think about it. Okay, my house may be paid off, but I still have insurance. I still have taxes. I still have maintenance. It's still got to be taken care of. And no, my house is not paid off. I got a mortgage to the hilt because it's the last tax advantage, well, one of the last tax advantages that the regular person has. And keeping your money separate from your house, it's just a wise decision. Because here's the thing, you pay off your house, guess what? You get hurt, you try to refinance, get that some money out. Ain't happening. Ain't happening. You can't, if you, yeah, no. There's a whole bunch of different thoughts behind that. Okay, you get those people say, pay off your house, it's great. No, it's not. It's a horrible thing. That's like having a checking account or savings account that you can't access. Because think about it. Whatever your house is worth, you cannot go to Dunkin' Donuts and buy a cup of coffee with the equity you have in your home. But here's the funny thing. The equity you have in your home, well, you can borrow against it. What's the rate nowadays? 4.5%, 5%? And if you can make 20, 30, 40, 50% per year, why the hell not do that? And keep the money separate from you. That's getting on a different topic. But anyway, yeah, mortgage to the hilt. That's my opinion. That's what I'm going to do. Okay, in January, I'm going to mortgage the house to the hilt, jump in a boat, float around, and just make the payments. Because if I'm getting 50% a year, I got no problem whatsoever borrowing mortgage money at 10%. None. No problem at all. But don't you guys do it. That's not advice. That's something totally insane. Well, I've been doing this for 30 years, so, it's okay for me. But for you guys just starting out, take your time. Paper trade. Learn first. Find a good strategy. Something that works for you. Not only the time factor, but the rate of return and the risk involved. Yeah, this has very minimal risk because we're only buying, I am only buying good quality companies. I'm buying them at whatever the price is, 10.30, then I'm going to sell them for 10.30. I'm not doing this one. Not that one. Anyway, let's keep on going. Simple and smart way to invest $1,000. RM 1991. I know nothing about you. I cannot give you advice. I can't because I have no idea what it is you're looking for. So I can't say buy this and you say, wait a minute, that doesn't make any sense to me. So I know nothing about you. If you really want my opinion, send me your phone number. I personally will give you a call. Okay, let's keep on going. Let's keep on. T, what's going on, T? Alex, I'm paying $5,000 to the first. Alex, I hate it when you do that. I really do. St. Martin, what happens if you do a covered call and the stock drops 5%? Do you sideline that money? No. Okay, here's the thing. All right, let's find a good one. Ford. No. General Motors. No. AT&T. Sure, why not? AT&T. All right. AT&T. Here's the high. Here's the low. Here's where it was. Here's where it is. Okay, so let's just, go through this for a second. So last year, we're at $22. She shot up to 23. Now, from 22 to 23 is only $1, which is 5%. So it goes up 5%. And then it goes from 24 down to 22. $2. $2 on a $24 stock is a little around 10%. So here's the thing. She shoots up, she pulls back. What do? You don't know. And then she shoots up, she hits 25, pulls back to 24. That's $1. $1 and $25 stock is about, wow, brain's misfunctioning. But she goes up, she comes down. You want to sell, take that loss, that's up to you. I refuse to take a loss because rule number 1 is never buy something you do not want to hold long term. So, St. Martin, if this thing hits a high of the year of 30 and a low of the year of 20, okay, the difference between 30 and 20 is 33%. 33% between there and there. Not 5%. Stocks go up, stocks go down. They go up, they go down. They go up, they go down. They go up, they go down. The idea is to always pick a good company. As she drops, fine. Then you have a choice. Do I dollar cost average? Do I roll it forward another week? Do I drop my strike price? There are a lot of things you can do. But if you stick to the rules, never buy something you don't want to hold long term, well, look at AT&T. Okay, she was down $20. And she shoots up to 29, drops back down to 26, shoots up to 29, drops down to 26, shoots up to 30, drops down to 26, shoots up to 27, drops down to 25. And what do you think it's going to do next? Well, it's going to shoot up, it's going to pull back. It's going to shoot up, it's going to pull back, because that's what stocks do. Now, we're doing weekly, so yeah, you're going to feel it a little bit differently than before you came here. Because before you came here, most people bought a stock and only got the dividend every 90 days. That's once every 3 months. Once here, once here, once here, and once here. 4 times a year. Well, now you have the opportunity not only to collect the dividends, but to also collect some kind of a premium on a weekly basis. So if I buy it at $25.53, I sell somebody the rights to buy it from me at $25.50, I'm collecting a nice premium at 1.5%. Well, great, that works. Well, as the stocks go up, I may sell it or I may roll it into the next week and pick up another premium. And then every single week I have a choice. Do I keep it? Do I roll it forward? Do I let it go and pick up something else? Because it goes up, it goes down. It goes up, it goes down. And guess what? There's 10,700 other companies doing the exact same thing. Go up, go down, go up, go down. Every single one does the exact same thing. They go up, they go down, they go up, they go down. All looking for the same thing. To be profitable, to give back to the investors some kind of rate of return. Well, that's what we're looking for. Wow, it's 10:53. Let's get some more of these questions. More questions on your Uber example. Do you rely on, or do you really have to pay $9,000? What was the Uber one? Hold on a second. I'm a little lost on the Uber one. What's this one? AT&T, Marvel, Altria, Uber, right here. Okay, so here's the Uber trade that he's talking about. Okay, buy one covered call Uber, 100, that's the weeklies, 31 October 25. That means it's expiring this week. The $96 call option against the stock at the market to open. That's the trade. Okay, what is it costing? Well, the cost of the trade is $9,400. So to answer your question, yeah, you got to buy the stock in order to do a covered call. It's an investment. That's what we're doing here. We are investing. And when we invest, you got to spend the money, or you have to invest the money. It's the same thing. So if I'm investing the $9,000, okay, my return is $142 for the week, if the stock is above, where is it, 96, come Friday, well, I get all that money back, and I get this, and I get anything else different that I'm looking for. So it's just an investment. Okay, so if you're going to buy a house, you are going to put money into it before you can get the monthly rent. Okay, if you buy a car and you want to rent out your cars, a lot of people do that. They buy a nice car and they rent it out. Well, great. You still got to dish out the money in order to get the investment return. Yes, but do you sideline that money for the covered call? Why would I sideline that money for the covered call? It's profit. Okay, this profit here, where is it? Right there? I use that, I use that to pay my bills. How do I get rid of this thing? Oh, here we go. Nice. Okay. Bring it back. Oops. Bring it back down to right there. All right. All right. Johnny Boy, where do you look to see if stock pays dividends weekly or monthly? Johnny Boy, that would be the CBOE, Chicago Board of Option Exchange. Angel Franco, how you doing? Veterinarian doctor, how are you? Daniel, how are you? Oh, I missed a bunch. All right. Martin Tiller, what's your opinion of combining a covered call with a protective put? It works if that's what it is you're looking to do. I don't do protective puts. Some people do. I don't. Digital marketing guide. There's always somebody asking me about this stupid stock. Always. So, no, not that one. This one right here. Okay. So he wants to know about NVDY. Now, for those who've been here before, you know exactly what I'm going to say to Mr. Digital Marketing. All right, so NVDY. Now, he's saying NVDY has 120% dividend annually. Okay. Now, first thing I want to do is I want to check and verify that. Look, historical data. Okay, this is Yahoo Finance. If you're going to be investing, you need to have access to a financial website. Whatever financial website you want to use, fine. I'm using Yahoo Finance. I'm going to look at historical data for YieldMax NVDA. It's at $16.22. Let's take a look historically if he's correct. Okay, historical data. Give it a second, it'll shine right up. So what other questions do we have? Simple, you got that right there. Kevsta, how you doing? Miss Pontiac, good evening. Thank you. Okay, there it is right there. All right, so who said this one? Digital Marketing Guide. All right. I want to check out historical prices, and I want to look at all of the history. First thing I want to do is click on right there, right? Dividends only. Now, there's a reason why, digital marketing, I want to take a look at the dividends only. Because as a stock is profitable, they got two choices. Take the profits, give it back to the investors, or take those profits and put it back into the company. So you're saying NVDY is paying out 120% annually. Now, think about that for a second, because you're probably excited about the 120%. Well, let me give you this for an idea. Let's just chew on this for a minute. Let's say my company makes $100 million a year profit, 100 million profit. If I make 100 million profit, how the hell am I going to pay out 120 million to dividends? Think about it. If the profit is whatever it is, how can they give out more profit than they make? Because a dividend is a portion of the profits. And you're saying they're giving out 120% dividends annually. So if I make 100 million profit, how can I possibly pay out 120 million? The numbers just don't work. As a matter of fact, let's take a look. Dividends only. And I want to look at all the dividends, maximum. Okay? I only have one minor problem in NVDY. This company is only 2 years old. Okay? June 7th, 2023 was the very first dividend. Okay, so the other problem I have with NVDY, are you ready for this? First dividend, 74. The second one, 95. That's higher, correct? That means they're making money. Well, the third one is 81. That's going backwards. 93, that's higher. 67, backwards. 41, backwards. 50, 62, 153. 153, 266, 260, backwards. 119, backwards. 256, 247, backwards. 125, backwards. 135, 110, backwards. 102, backwards. 118, 89, backwards. 82, backwards. This thing goes backwards more than it goes forwards. So explain to me, if you will, all right? Okay, the highest dividend they paid out looks like $2.62. Yeah. $2.62 is the highest dividend they paid out. That was 2024 in March 2024. $2.62. The last dividend they just paid out, 12 cents. Explain to me, you think that's a good deal? $2.62, the highest dividend they paid. Well, now they're paying out 12 cents. And you think that's good. Well, if 12 cents is 120% of their profits, a couple of years ago, their profits was $1.62 per share. Now it's 12 cents per share. And you think that's good? I don't care what number they put behind it. Those numbers are going backwards. Those numbers are going up, down. Yeah, no. Terribly sorry, digital market. I'm gonna argue with this one. I really am. Take a look at the numbers. Seriously, take a look at the numbers. 12 cents. Okay, last year it was $1.62, $2.62. $2.62 last year, and the recent one, 12 cents. And you think that's good? Hell no. Hell no. Holy cow, we're past 11 o'clock. So let me breeze through these really quick and see what we have. I'm not going to get through all these questions. Thanks, Bruce, TD, Tech, thank you. Felix, how are you today? Felix, we already looked at Verizon. We did. See my page, how are you doing? William. Free, okay. See my page, dividend stock talk, yep. Big Mac, you wouldn't get the dividend, but you would still get the weekly. Exactly, I'm not looking for the dividend, Big Mac. Okay, I'm not looking for the dividend, I'm looking for the premium. There's a difference between the two. Dolly Chad, Mini-Me from 20 to 30 is 50%. Yeah, but from 30 to 20 is 30%, 33%. Okay, that's what I was saying, Mini-Me. From 30 to 20 is 33%. Crypto Bull, how are you today? Oop. Jihu, can't understand. Keep coming back. He's talking options. Golden Nugget, thank you, Kate. Oh, all done. Uh-oh. Mary has Coney. How are you? Can you, sir? Can you check on DVLT? No. Mary wants to take a look at Coney. You're going to find the exact same thing with Coney as you just found with this one. Mary, you ready? All right, Yield Max Coin Option Income Strategy ETF, CONY, Coney. Here's the dividends. Okay, whoops, let's look at all the dividends. All of them. Here we go. Oh, look at that. October 2023. Do you see that, Mary? October 2023. This thing's only 2 years old. Kate, I don't know if you saw mine. When and off. Hold on, Kate. Okay, so same thing. Okay. Mary, Coney is now weekly. Okay, fine. Okay, Coney is also good. All right, let's take a look at this one. Very first dividend 2 years ago, 120, 107 down, 146 up, 169 up, 107 down, 166 up, 179, 122 down, 169 down. So that's okay, down, up, down, up, down, down. It's like not consistently profitable. Where are we? 222, 279 is the highest. Down, 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 down. 111 up, down, down, up, down, down. How the hell can you tell me that's good? The profits are not consistent. Hold on. I'll show you what consistent profits should look like. Oh, look at that 31. That was horrible. Maximum amount. Here we go. All right. You ready for this? All right. Now, I want to go. Remember, I said consistent profits for 2 decades? That's 20 years. That's 2005. 2005, 8. 9, 10, 11, 13, 16, whoops, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83. Did you notice every single one of those was higher and higher and higher and higher? Big Mac, same thing. ULTY, TSLY, same thing. Not consistently profitable. Not 20 years old. No, thank you. Okay, you invest your money the way you want to. I invest the way I want to. I want a company that's consistently profitable. Plain and simple. Okay, every single one you named off is a no. Red Dad, SYY, monthly. I don't do monthlies. The numbers just don't work. Okay, we're past 11 o'clock. They base their dividends on call options. Yeah, Mary, I understand that. But there is such a thing called profitable and not profitable. Okay, if the profits are decreasing, that means the profits are decreasing. Go to the stock historical data, then change it to dividends and max time. All right, I just did this one, Kate. All right, RIT, it's past 11 o'clock. I'm usually done at 11, so I'm going to call it a day. You guys have a great night. Did you see Amazon is laying off 30,000 people tomorrow? Okay, I don't have a problem with that. I'm not doing good. Sorry, Eagle 18, sorry about that. Mac, thoughts on Coca-Cola? We already looked at that. Kate, no, I was helping someone else. Thank you there, Kate. I appreciate that. Mary, thank you. I learned a lot from you. You're an excellent teacher. Oh, thank you. Oh, Kate, Wen and Hoft. Ugh. I never heard of either one of those. I feel bad about that. Wen, W-E-N. W-E-N. What the hell? Oh, Wendy's. Oh, okay. Right, hold on a second. Wendy's. What about that looks appealing? Now, to me, Kate, what looks appealing is this right here. The bottom of the year. Okay, because you cannot, I repeat, you cannot buy lower than the bottom of the year. And we all know to make money in the stock market, you buy low and you sell high. Well, here it is, invitation, the low of the year right there, if you like Wendy's. Okay, so Wendy's, the high of the year was 2046. The bottom of the year, which was last week, was 849. Well, here's your last 30 days. And that's pretty plain to see what it looks like it's doing next. Take a look, Kate. Okay, up, here's your 30-day high. Here's your 30-day bottom. Shoots back up. Now she's coming back. 1, 2, 3, 4. 4 days. If you really like Wendy's, wait for a new bottom. It's coming. It's dropping. Wherever the new bottom is, it may be tomorrow, maybe the next day, maybe the next day. If you really like Wendy's. So Hoft, H-O-F-T, what the heck is that? Hooker Furnishings. Hell no. Sorry, I don't do monthlies. November, December, February, May. The reason why I don't do monthlies, I can only do it once a month. And that means I don't earn as much money, and that just doesn't work for me. Sorry, Kate. Thank you, thank you, thank you. Bullish Boxer. Hi, could you check AEYE? Why? Why would I check that? I've never heard of it. AEYE. Hell no. See that? Monthly. No, I don't do monthlies. Plain, simple, no. Are you a day trader? No, I'm not. Dang it, I'm trying to find weeklies. Kate, it's simple. CBOE. Oh, here we go. Watch this. You'll like this one. Down, 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 down. CBOE.com. Chicago Board of Options Exchange. They will tell you every single option, every single stock that has a weekly option on it. CBOE.com. All right, I'm done for the night. You guys have a great day. And we're going to do this all again tomorrow. Yay! I'm Mike from the USGSO. You know about that stock very soon, my friend. I probably won't. All right. Done here. You guys have a great night. See you all tomorrow. Tomorrow. I love ya. Tomorrow. You're always. Did you get my message from me and my 6-year-old? I sent a second one. Ooh, Kate. No, I have not seen it yet. Did you send it here on TikTok? Here on TikTok. Hey, Club Med Tom. How's it going? Let me finish signing out of all this. Sign out there. Signed out there. Signed out here. All right, signed out and here. You guys have a great night. Kate, I'm going to double check and see if it's on there. Out of here. Oh, 245. Wow. Guys, have a great night. From your website, but I still sent it here. If you rather, yes, I would rather you send it here because I check this one 2 or 3 times a day. And now